I do think it's close, but I still think you might have a couple more hits over the next month or two before it finally breaks out. But once it breaks out, you probably get a short squeeze and people do rush into silver. I would say, $35 would be very quickly had, and then very possibly within a year or two, you're retesting your $50 level.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Gareth Soloway joins us today. Gareth is the Chief Market Strategist at verifiedinvesting.com, and Gareth is a financial expert specializing in chart analysis and market insights. And we're delighted to have Gareth join us once again today. It's time to saddle up and silver up for Gareth Soloway. Gareth, welcome back to SBTV. How are you doing?
Oh, I'm doing wonderfully well. Thanks for having me back.
Glad to have you back. Appreciate the time once again. Gareth, I visited your YouTube channel and I heard you say when it comes to your analysis, this is not mainstream media. This is telling you the facts, the data, letting you guys decide what the heck is going on. So, with
That's
that,
right.
Gareth, what the heck is going on? Are we being told the truth, the whole truth, and nothing but the
Nothing
truth?
but the truth. Yes. So I think this is the key, right? Is that if you look at human psychology, which is what drives markets, we have a situation where the general public wants to believe that there's a soft landing, that everything will be okay. After all, we are optimistic as a human culture, right? So I think you have this kind of going on right now. We see the stock market trying to work back to its all-time highs, even though we're seeing inflation starting to creep up. We're seeing the economy starting to stall, but we all hope, or at least a majority of people are hoping, that the Federal Reserve can save us again by printing money and lowering rates like they have so many times previously, really going back to the early 2000s. And so that's what we have going on right now. There's not much fear out there. The VIX is very low. We are seeing smart money accumulating gold. We've seen gold break out here, even though it's underinvested by the retail public. We see China buying massive amounts of gold. So there are signs that the bigger, kind of the smarter money, if you will, are recognizing the risks that are coming. But for the most part, the retail investor is still buying the dip, and the meme stocks are going nuts.
Yeah, I'm going to touch on that. Those are meme stocks in just a bit. But you mentioned the Fed saving us. Can they save us, or are they running out of mulligans here at this point?
Yeah, I mean, basically, the way it's going to work most likely is that you're not seeing inflation coming back to 2% or sub 2%. And that was kind of the wild card that allowed the Federal Reserve to lower interest rates so much and to print as much money as we saw them do by expanding their balance sheet. And so what's going to end up happening is that because inflation is going to be still elevated, we still see it above 3%. If they start lowering interest rates too quickly and start printing money again, inflation will have another big surge higher, a la the 1970s. And for those of you that may not know, in the 1970s, we had a pop in inflation, and then it dipped back down, and then we had a bigger pop, and then it dipped back down, and then again a bigger pop as the Fed was trying to kind of loosen monetary policy each time. And I do worry that we are now in store for that type of future versus the low inflation future past that we've seen recently.
All right. So is that soft landing still in the works, or buckle up?
Yeah, so I haven't been a big believer in the soft landing narrative. I think that for the most part, it makes for a good story. It makes people feel good. It keeps the economy humming, because if people thought there was a hard landing coming, they would stop spending right away, right? But because you're seeing that narrative being spun by the government, by mainstream media, people say, you know what, I can run up credit card debt to 1.1 trillion where it is. I mean, there's the what they call phantom debt, which is buy now, pay later, $700 billion in that debt, and people feel okay about it. I mean, they're not loving it, obviously. No one loves being in debt, but they say, you know what, things will get better. I might be struggling a little, but don't worry about it. It'll be fine. That's what I'm hearing across the board. And ultimately, if it's not, there are major defaults. I mean, just imagine all this debt, and if people lose their jobs now, what's going to happen? The other thing to point out is that so we know the U.S. government debt's at around $34.5 trillion. The way it's supposed to work is that when you have a recession in a country, the government spends more to stimulate the economy, and then during expansionary periods, they bring in more tax revenue and pay down that debt, right? Because they don't need to stimulate it. The problem is we've had an expansionary period now for years and years and years, and all that's happened is the debt has gone higher. And so, what happens when we actually hit a roadblock and we do have a recession? How much higher is the U.S. debt going to go? How much higher is the balance sheet of the Federal Reserve going to go? And there's going to be a point, there's going to be a breaking point. It may not be for years, but there will be a point when other countries say, I am not going to lend you guys any more money because I just don't expect to get paid back. And we're not there yet, but interest rates now are higher. Other countries are demanding higher interest rates, but it is something we have to be aware of.
Speaking of other countries and all these years that have gone by, if I recall, I think 70% of the world's population will be voting this year. Now, in one ear, we're going to hear, hey, things are okay, economy is doing great. In our other ear, we're going to be hearing, no, 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 things aren't that great. Things are very, very bad. Yeah, Gary, with all this noise going on in our left ear, in our right ear, how do we drown out this noise and stay on factual point? I mean, what should we be looking at? Who should we be hearing? And how does all this affect the markets?
Yeah. So the first thing I would suggest, and this is something that even I try to do, although because I'm involved in the market, I have to pay attention, but really stay off social media, right? I mean, social media, you have different sides, both spinning their narratives, right? And to be honest, the reality of it, and I'm sure you know this, and most people do, is the reality is it's somewhere in the middle, right? It's not horrendous. We're not in a depression, but some people would have you thinking we're in a depression, and we're not in a huge expansionary market where everything is great. It's kind of somewhere in the middle. My biggest fear is that it's in the middle right now, but the stimulus that has been done is now starting to be sucked out. And if it's not sucked out, then inflation comes roaring back. And so you have a big group. I mean, I think here in the US, one of the biggest negatives is that the difference between the middle income and lower incomes and the wealthy is just growing bigger and bigger, right? The wealthy have investments in the stock market. They have all these things where they're doing okay, but inflation has just crushed the middle and lower income brackets. And I think that's something that is creating this dynamic going into all these elections where you have really a lot of people very angry and saying that we're not on the right path. And it's something that's going to come to a head. And it's unfortunately, I worry it's not going to be pretty, right?
Right. Well, yeah, maybe staying off social media is a good idea. Except, I mean, they can watch your channel. They can watch our channel as well.
That's true. Yeah. And by the way, that's a good point is find the places where you're going to get data but without like a narrative being spun, and then just really just look at the data. And you can see, like, I mean, I've been talking about looking at, unemployment reports and even U6, which is underemployed. The media, general mainstream media, doesn't really talk about the U6, but it's a good leading indicator for a potential recession. And the U6 is basically underemployed. So it's people that want full-time jobs, but they can't find them, so they take part-time jobs. So technically they're not unemployed, but they're just underemployed. And that number's been increasing. And that is a precursor historically. If you look at the data, to every recession, it is a precursor. Now the biggest question is, how big of a recession are we going to get? I don't think it's going to be like the end of the world type situation. I think it's going to start out being a minor recession, but I do worry that it's going to be something that's drawn out for a long period of time, because we're kind of a drug addict that's been fed these drugs by the Federal Reserve in terms of money, and the Fed won't be able to feed us even more money to push us back into expansion. So I would say that's my biggest concern, is that it's not that we're going into depression. I don't think that's quite yet. I think that's down the line, but not in the next few years. It's more that we get into this period where it's just kind of like a crappy, recession that kind of lasts a long, long time.
I want to get back to that comment about social media. Uh, a tweet, a simple tweet came out by Roaring Kitty, caused incredible commotion in the markets, and with the name we might recall, that being GameStop or AMC. Gareth, how does a simple tweet, cause such commotion in the markets?
Yeah, and that's a great question, right? So basically the key here was that he had been silent for 3 years. So he has not tweeted in 3 years. And so just the mere fact that he tweeted goes up on radars. And you basically had the perfect storm where going into his tweet last week, GameStop had already gone up about 100%. So people were already taking note. And then for him to do it, it was like perfect timing on his part to, people were already excited. They just needed that final push and then off to the races you go. And then you have these 0 day options. You have, the day traders. You have all these players that are just wanting to get involved and make money fast. And many of them forgot the lessons of 2021, which is yes, GameStop had a great move. So did AMC. But remember, GameStop went all the way back down to $10. And so it's one of the reasons why I don't think these meme stocks will run the same way, because there were a lot of people that got burned that bought GME at, let's say, $100, and they saw a lot of their money go away. So they're going to be much more cautious this time in terms of taking profits. And it's unfortunately, it's a lesson that we all learn, right? Early in my trading career, I had to learn that listen, don't get too greedy. You get a good gain, you pocket that and be thankful of it, because it can be taken away very, very quickly.
If you're enjoying this interview with Gareth Soloway and I, please consider subscribing to our YouTube channel. And did you know that at Silver Bullion, there are 6 different types of accounts to suit your needs? To find out more, go to www.silverbullion.com.sg, go to the signups tab, and choose from these 6 different types of accounts. Or email me, Patrick at silverbullion.com.sg, and I'll help to get you started. I got sucked into that as well when he made that tweet about Dogecoin. I ran into it thinking, hey, this thing's going to make a lot of money. And unfortunately, no, it didn't. And I was going to repay him by buying a Tesla with all that money made, but with a light wallet full of Dogecoin. And it's still the old footmobile for me, no
I
Tesla.
understand.
But getting back to GameStop, I understand that trading stopped some 8 times because of volatility. What was your take when you saw the multiple stoppages?
Yeah, and that's such a tough situation, right? Because number one, it looks shady, right? And when for instance on Robinhood they stopped people from being allowed to buy it, you don't know if it was because they really had issues at Robinhood where they were. I think if I remember correctly, Robinhood, they were being demanded that they had to put up X amount of billion of dollars to be allowed to do this from another player that was in the financial side. And so either way, it just doesn't look good, and it undermines the credibility of our financial system to a lot of younger investors. And really, if there's one thing that hopefully 2021 taught us, it's that these financial firms have to be able to handle any situation without any shutdowns. Because as soon as you shut it down, it just comes across as, oh, they're trying to stop the move here because there's a bunch of institutional hedge funds that are short and all these other things. And whether or not that was the key, whether that was true or not, I don't know for sure. It certainly made it look like that, though.
Yeah, because I recall about a year ago, maybe more than a year ago, we also saw the same thing happen with nickel. I mean, it had a phenomenal day or a few days, and next thing you know, the exchange shut it down.
Yeah, yeah, it is too bad. Some of these brokers, they say that they're doing it for the safety of investors, but you also can't help but wonder if there is some ulterior motive. And I've always been a big proponent of self responsibility, which is, I had to learn the tough way how to learn how to trade and invest, and I lost plenty of money doing it. And it's almost like in a weird way, it's paying you for your education. And so sometimes we all have to take losses. And I don't like it when businesses make decisions about whether you can buy a stock or a crypto versus you making that decision with your own money. If it's your own, it's one thing for them to say, hey, I'm not going to give you leverage. But, if it's your money, you should be allowed to do what you want. That's all about what independence is and what we should all have the right to do. And so, again, it just comes across as being like, what the heck? And I've even had that experience myself. One of the brokers I have multiple brokerage accounts, but one of them doesn't allow me to even, buy certain ETFs that are higher risk. And granted, I can do it through other accounts. I don't mind. But it just kind of leaves that taste in your mouth like, what the heck? Why are they determining what I can and cannot buy?
Yeah, Gareth, you're a seasoned professional trader. You've been through quite a bit. How how would you recommend the guys like us? how do you recommend us to be able to take our emotion out of our trades, out of our buys, out of our selling?
Yeah, and that's such a tough one to do. It's something that even to this day I deal with. Is you do have a little bit of emotion that bubbles up in certain scenarios. The way I handle it is I never invest more than I feel comfortable with. And if I told you, hey, invest $10 in this, you'd probably be like, okay, sure, and you would just forget about it. You would have no emotion. You wouldn't even care if it went up or down. And in a weird way, that's what we have to do with investments. And so diversifying is so important, because when you diversify, yeah, one investment may be down, but if it's only 3% or 5 or 10% of your portfolio, you're not going to get super stressed even if it goes against you. And I think that's the best way to control emotion, is to spread that money around. And so you'll have some things that are up, some things that are down, but the idea is that over the long term, you really build that wealth, even if in the short term one does not go your way. And that will really keep your emotional, because this is the key, is that as soon as we get emotional, we tend to make the wrong decision, and we get out at the wrong time, we buy at the wrong time, and that's when we take our losses. So the key is to don't allow that emotion to come in, and to do that, keep your position size in check.
All right, some great advice there. All right, so I'll move over to precious metals. Gareth, with something like silver being in a deficit, hundreds of millions of ounces, 3, 4 consecutive years already, and with the knowledge of solar panels, solar paste, the whole photovoltaic industry chomping away at the supply of silver, how is it that we just aren't really seeing the price move as much as maybe we think it should?
Yeah, and I'm going to share my screen here so we can look at the silver chart, if that's okay. So basically, what we have on silver is that it has been consolidating for a really long time, since the highs in 2020. And so there's a couple factors here at work. So number one is that China's been in a very tough spot economically, and so they are just in general a big demand force when it comes to commodities as a whole. So whether it's oil, whether it's silver, whether it's other precious metals or rare earths. And so the fact that their economy has been struggling has really meant that silver probably hasn't performed as well as it should, right? Because silver, remember, folks, is really, it's a precious metal, it's a store of safety, but it's also an industrial metal, like you mentioned, in solar panels and various other things. So I think that's part of it, is that as long as you have some areas of the U.S. or the globe, I should say, in a recession or close to, silver likely will underperform. However, if you get back in a global expansionary period, silver is going to be what outperforms, right? And so really, in terms of charts, we still see it below the 2020 highs, which was around $30. We did touch it, and it got rejected here. But if we flip over to gold and we look at the difference here, gold very clearly, here's your 2020 high right here. We've obviously broken a well above that because of all the factors that we've talked about early on, the inflation numbers, the printing presses, the U.S. debt. I mean, all of these factors make gold the place to be right now. Now, I do think that silver eventually breaks out, as I do think all precious metals do. But certainly, I think that, yeah, I mean, it's one of those scenarios where silver, especially if the U.S. starts ticking towards recession, which I think it will, silver will continue to underperform in the near term.
I'd spoken to your colleague, Dr. B, and he had mentioned how gold had to knock on that all-time high door a few times before it finally broke through and held. Silver, it's been knocking on that $30 door or close to it a few times. Do you think it has a few more knocks before finally breaking through?
So my guess is it only has maybe one more knock. And so if we look at gold here, we had the high here in 2020, then it hit again in 2022, again in 2023, and then really in late 2023 it pierced, it hit again here, here, and here. There was a bunch of subsequent quick hits at the all-time high of around 2075 before it finally broke through. So I believe that what silver did recently is right here. This is where we are in the silver chart with this hit, right? And so what we're going to probably see is a bunch of hits over the next couple months along this level. And if we go to silver just to kind of look at it on that chart, and so again, if we look at the hits, we had the 1, 2, and 3. Now we need to come up and kind of bounce along that level here. And again, just to kind of draw it into perspective, we probably have to go up like this, small pullback, again, small pullback, and then eventually break to the upside and break out. So it is close. I do think it's close, but I still think you might have a couple more hits over the next month or two before it finally breaks out. But once it breaks out, you probably get a short squeeze and people do rush into silver, and you probably see them move up. I mean, if we go to the monthly or the weekly chart, I would say, $35 would be very quickly had, and then very possibly within a year or two, you're retesting your $50 level on silver. And I do think eventually we even go above 50, as there's no way for the global central banks and governments to get out of the mess that they've made without printing down their currencies. So even if the globe is in a recession, eventually if people print enough money in all these different currencies, yen, yuan, dollars, etc., eventually metals have to go higher because there's just too much supply of currencies out there. And in terms of those currencies, it has to go higher.
Gareth, do you think that a $30 level is as much of a technical point that we're trying to reach as much as it is a psychological level for us?
Yeah, I actually think they're both tied, right? Psychology is how the charts are created by buyers and sellers, greed and fear. And so I think it's all one and the same, is that psychologically it's a huge level, therefore it's a big level of resistance, but once it breaks, the psychology is going to break out as well, and everyone like me is going to say, "Holy cow, we finally broke 30. Here we go." And it's going to surge up very, very quickly. So yeah, I think 35 comes very quickly once we break 30. Then maybe we retrace a little bit and consolidate, but again, then eventually that $50 level down the line.
It's also been said that silver is a more volatile metal than gold is. When silver does break through that $30 level, do you think we're also going to then see the silver to gold ratio come down a bit, where silver will start to outperform gold?
I do think that will happen. Yeah, I do think once you get the breakout on silver, the ratio will readjust in silver's favor. And again, it's just more so, like you said, is that it's a much cheaper precious metal, and therefore it attracts a lot more smaller investors. The same people that are buying GameStop, AMC during this crazy period, that would be something that they would feel very comfortable about buying, because they could literally buy quite a bit of it with the money that they have, and it would actually be a lot of buying pressure from these investors that maybe have a little less money. So I do think that it will become very volatile and have a big pop. Yep.
What would you say are the driving fundamentals for gold that are driving up the price?
Yeah, so fundamental wise, I mean, the first thing, even before we broke out from these all time highs, one of the things that I've talked about for the last 6+ months is that, central banks were just loading the boat on gold. And we saw China being the leader at that, but really a lot of central banks, almost all of them, have been doing that. And I always say follow the money, right? When the people that have the control of the printing presses are buying the metal, the precious metal gold, it tells you something. It tells you what they're doing, and if they're the ones that are controlling those printing presses, it probably means we need to buy gold as well, and we've seen it break out. So I think demand from central banks will continue. I think it's a way for a lot of these other countries to kind of diversify away from what they fear is coming for the U.S. and the U.S. dollar, maybe de-dollarization down the line as well, to protect themselves. It's also a way for them to have gold on hand, but if they have to print their currency, they can print that currency but still have the value being retained in gold in terms of that currency. And so those are some of the factors there. And then you throw out the US debt, and the chances are is that we are going to see more turbulence in the financial markets in the future because of the Federal Reserve and the recession and printing of money. All of these things, really any angle you take, it all leads you to believe that hard assets are likely one of the best places to be over the next 6 months, year, 5-year period. And I think, again, it does worry me where we're going as the U.S. with the debt there, and how high is it going to go if we go into a recession. And even the Federal Reserve has already said they're stopping their runoffs on their balance sheet. They're coming to a close on that. And so that means that their balance sheet now is way higher than at any point historically. And if we go into a recession, that balance sheet is only going to grow. So everywhere you look, more dollars are going to come into play. And that means the metals are going to be king of the castle.
Gareth Soloway, before we head out, can you tell us about verified investing and the services you provide?
Yeah, it's absolutely. So verified investing, we just merged in the money stocks into verified investing. Excuse me. One of the best things about verified investing is that I've made the homepage, the data center as I call it, free and with more information on data, on different economic reports, on earnings, on so many chart analysis points. It's all free for users. So go check that out. There's more information there at one point than you'll find anywhere else. In fact, I have said that I wish I had something like this when I was younger with one website with all this information. So it's there for you guys. In terms of services, I run a crypto service, a stock service, as well as a commodity service. So you can always check those out. They're called Smart Money Stocks and Smart Money Commodities, Smart Money Crypto. And we just do lots of education. I think the biggest thing to remember, folks, is that you may feel lost when you're investing sometimes, but you don't have to be. You learn how to read the charts, human psychology, and you actually can put probabilities on your side, as I've done with many of my traders here. So go check out Verified Investing. It's really worth it.
All right, Gareth Soloway, thank you for your time and sharing this great info and your charts with us. Really do appreciate it. And I hope we can do this again soon.
I would look forward to that. Thank you so much.
That was Gareth Soloway sharing his views on charting precious metals and the economy. To see more of Gareth's views and work, please go to www.verifiedinvesting.com. If you like this video, please do subscribe, give us a thumbs up, and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.